I'm Matt Bichard here at the Hay Adams in Washington, D.C. for NAREIT's 2019 CEO Forum and Advocacy Day. Joining me today is Dave Schulte, President and CEO of CorEnergy Infrastructure Trust. Dave, thanks so much for joining us.
Glad to be here, Matt.
Now, infrastructure continues to be a very hot topic in the United States. How important, in your opinion, is diversification among energy commodities to CorEnergy's success as an infrastructure-focused REIT?
We think diversification is critical to our business strategy. We want to be diversified across energy commodities, oil, gas, and other products, as well as across what's called the energy value chain, so upstream-oriented companies that are producing oil and gas, midstream that transport or process oil and gas, and then downstream companies that deliver that last mile to your household. We have assets across all of those and doing both oil, gas, and other produced commodities such as liquids.
And how does owning energy infrastructure real estate within a REIT structure benefit CorEnergy and its shareholders?
Well, there is a growing global investment appetite for the investment characteristics of the infrastructure asset class. That includes high barriers to entry, largely contracted cash flow streams, so visible revenue streams, and high cash flow component of the total return. If you look for those characteristics, they exist in real estate, and as long as the infrastructure we own is classified as real estate, and most of it is, it's appurtenant to the ground, or it's buried in the ground, it's storage above ground. Those are familiar assets for real estate investors. So by owning those infrastructure assets in a REIT, we have a very efficient tax structure that can be owned by virtually any investor, taxable, tax-exempt, U.S., non-U.S., individual, institutional, who will get a 1099 instead of a K-1 security and have the tax incidents that are beneficial because of that.
And lastly, you said it recently that the market's evolved dramatically since oil prices collapsed in 2014 and 2015. What's been the biggest change that has impacted CorEnergy?
You know, in 2014 and 15, we think our biggest competitive dynamic in the market was that oil prices were at $100 or better, so companies had high margins. When oil prices are lower and increase volatility, those companies need to live within their means, and there's been an increased amount of discipline by upstream energy companies since 2014 and 15, whereby they are willing to sell assets that they don't have to have, which are infrastructure assets that we like to own, in order to stay within their means and grow their production without raising debt or expensive equity in the capital markets at this time. So we actually think it's opened the playing field for us to be a more attractive source of long-term equity-oriented capital for upstream companies to do business with.
Dave, thank you so much for joining us.
Thanks for the opportunity.
For more on this and other REIT news and information, be sure to visit NAREIT's website, REIT.com.